Chris has worked across multiple sectors and markets throughout his career and is looking to transform the world of consumer finance and blockchain technology. So Chris, welcome to the show.
Thank you for such a lovely intro. And yeah, it's great to be on the talk show.
Yeah, this is what I like to do, is introduce people with lengthier introductions and give them the credibility that they have. So I just wanted to know, you've been in the crypto space for how long now? I'm trying to remember.
Just a few years, actually. So I've quite a varied career, but jumped down the crypto rabbit hole over the last 3 years specifically. So I've been through the highs and lows of the last few years.
I believe you've seen when, you had Bitcoin going up and down, and you've seen a lot of people utilizing crypto to be able to do a lot of things. And now you've seen a lot of crypto influencers everywhere saying, okay, come on, buy this, like inviting you to all these different group chats saying, you got to buy this piece of crypto, make sure so that we can elevate the price of it.
Well, I think the world saw a massive change in 2020 when COVID happened. So very much so on a social level in terms of the way in which Corona changed the world. But we also saw a completely different shift in the monetary system, right? So interest rates went to zero. You saw the central banks moving in different directions. There was such cheap liquidity to institutions, but also cheap liquidity to retail as well. So there was many people 2 years ago just sitting in their houses, unfortunately, not able to do anything. And that's where I felt the next bull cycle really came apparent, right? So crypto came on the front scene again. But yeah, the knock-on effect it's had in these past few years, it's a whole industry has been given continued emphasis, right? So we're back in a bear market, as is many of the equity markets and the global market. But there's a great community of builders happening again for that next wave to come. So it's been quite a spin. But yeah, I agree. The last, since 2020 specifically, when I had come in, it's specifically taken a huge spotlight globally than it had been in its prior.
Right. I've always noticed that crypto has been a very interesting asset to. I own crypto myself, but I never considered myself a trader. I just consider myself more like a buy and hold investor. So
we call that a hodler, actually. So holding over many different booms. So I think the buy and hold strategy and any asset is a better strategy than trading it day to day, right? You really need to know what you're doing if you're to be trading.
Yeah, it's just every time I've always felt like with the crypto world, I felt like there was this huge opportunity for decentralization and like DeFi. I've kind of noticed that people were just so excited about, being like utilizing currency away from the central bank, central government and all that. But I feel it's just people have just been utilizing too much. People have just been getting too excited, too greedy about like, I want to make the instant buck, the instant return very quickly over. Like I want to, instead of having it for a long term and being like, okay, let's just have a currency that can just be separated from the central government.
I think with many things in Web3 and crypto is decentralization. It brings transparency to everything, but of course it's very much in its infancy as well, right? So many people who don't know crypto that well, or perhaps the Web3 space, would see that it's very much just at a token level that has a price. And what I always signify is it very much reminds me of the dot-com bubble, right? Where you had this new form of technology. Crypto assets are forms of technology. They're a passing of value across chains and networks. So that's very much how we see it. But certainly within the dot-com bubble as well, right? There was a passing of speculation, let's say, in price action as opposed to the other type underlying utility of what you were investing into, whether it be a technology, a business, or whatever it may so be. So in the space that we're in now, I think that mannerism is certainly there because the space is so young. But as I mentioned just prior in my last comments, was that there's an underlying building happening now that will shake up the banking system, right? So we already see it through the Silicon Valley Bank and Credit Suisse, and all these other banks that have been shaken are going under now. Very interestingly, the price action of crypto has jumped right up, especially for Bitcoin, because consumer confidence is actually already starting to realize that having a decentralized nature to money or value is that the underlying benefit of these currencies is inevitable. We need to have crypto globally now, in the case that the central banking systems or traditional banking fails us, which it has in its past and surely will in the future as well.
Yeah, I just wanted to know, I mean, you're in the startup world, and you're also understanding the fact that, these banks like Silicon Valley Bank, Credit Suisse, they're all going under. Like, do you know particularly why that's why they're going under?
Yeah, I think ultimately it's because they took locked in risk across the bond markets, right? So again, back on the piece of how interest rates were so low a couple of years ago, the inflow of funds to these banks, specifically Silicon Valley Bank, was based around that they had so much money on their balance sheet is that they had to earn interest off it, right? So the place to be and to earn nominal amounts of interest was on long year treasuries, where they actually had to lock in liquidity to long-term agreements to earn nominal amounts of interest. The Federal Reserve then did basically a U-turn on policy and short-term interest rates, so in US treasuries. So therefore, a lot of the bank securities, specifically Silicon Valley Bank, they were just illiquid because their funds were locked into long-term treasuries. So that's the predominant issue that happened there. How it affected us ultimately. So of course it was a scare to the markets, but as you would have seen, the federal banks or the federal agencies of the US guaranteed through the FDIC that banks or deposits would be safeguarded. So although it was a scare, I think it has been overcome, right? So there's a lack of liquidity of investment going on in the markets as it stands. That would have been catastrophic if SVB went down, but the market still remains now because the Federal Reserve stepped in.
All right, cool. Let's get to know more about you, Chris. Like, what made you decide to get into the crypto space, and like, tell me more about your background, like where you come from, what made you, go into the space?
Sure. So I kicked off my career working in commercial ad tech. So I worked for LinkedIn and Twitter for a number of years, where I helped a lot of direct-to-consumer or fintech businesses and gaming clients around their ad strategies. I worked with a lot of businesses that were going to market, moving into new markets, or generally optimizing their ad strategy. So learned a tremendous amount of commercial engagement there, specifically with direct-to-consumer. Following that, I helped an Irish business. I'm Irish myself. You can guess my accent.
Where are you from in Ireland?
I'm just outside of Dublin, actually. It's a county called Kildare. So I did most of my education through Dublin City, which is the capital, but just from the suburbs, let's say, of Dublin City.
Oh yeah, because I've been to Ireland a couple of years back. I remember going on a what I call a 5-city tour in just like 5 days. So like from one city to another, from like all over Ireland, from all the way from Dublin to Waterford to Cork to like all the way west to County Kerry and Killarney, which is the town of Killarney.
Yeah. What was your favorite?
Killarney.
Yeah. I always say to people, the west of Ireland is very beautiful, right? So I don't know if you've seen the Banshee of Inisherin. It's a famous film that came out. It was about to win a lot of Oscars this year. But it really paints Ireland in a great space. So I always say the west of Ireland is really
I really love
I
hike that area. But anyway, so coming back to your thing.
Sure. Yeah. So I grew up in Ireland. I started out like many people working in big tech in Dublin, but it's stepped my eyes on the US. So I helped an Irish business that was moving into the US market, into North America. So I worked there for a year. That team built up significantly. I've worked in financial services in London. After that, I was in London for a year or two, dealing with a lot of FTSE 100 businesses around outsourced IT development projects. But got very bored of the corporate environment and actually found my way over to Berlin. So I've been in Berlin ever since, working in various different ventures, validating different business models within the early stage startups.
Why did you move to Berlin?
A number of businesses. Yeah, it's a good question. So I moved here, I was first asked to move over to an early stage business. So that was in the digital coaching space. They are now a unicorn globally. So they have a global footprint. So I helped them get to Series A. I was one of the first people in the UK team. So that was the initial stage of excitement. But what initially actually brought me here was the startup ecosystem. So in terms of the European landscape, the UK gets a lot of rep for fintech businesses. It's a very much a financial hub globally. But there's very good ecosystems out of Berlin and Paris, actually. So I came over here a few times. I'd noticed that the space was evolving. I always wanted to be in that early venture space, early venture capital, venture development. And the city has come on tenfold. So it's a city full of innovators. It's a very artistic place. So the city just kind of sold itself to me, right? And I decided to move myself over here. So I've been here ever since.
Right. And how do you like it? I mean, like, I believe Berlin is an emerging place and it is a what does it specialize in terms of startups? Like in terms, which industry does it work with?
Yeah, I think it's shifting. So it started out with, I would say, more logistics tech. Germany's very known to be logistic focused in terms of engineering, in terms of manufacturing, etc. You saw a lot of kind of technical innovation happening in these sectors that was more primary to the German market in terms of the way in which their economy ran. But you see a multitude of fintech businesses. There's emerging AI business, personal development is a big space globally now. And I feel in terms of sciences, in terms of consumer psychology, workplace, etc., there's a lot of very highly well-run businesses and very well-backed businesses in Berlin that are operating with these spaces. So I wouldn't say it's vertical specific. It's definitely emerged out of more of the traditional type industries and digitizing them. But certainly there's a multitude of different ventures, big and small, that come out of Berlin itself.
All right, cool. Yeah, tell us about the journey of Klink Finance. How did you start that?
Sure. So I basically have been a part of a number of venture builders, and basically I met my co-founder at the very end of 2021, very early 2022. Where we started to validate basically gamification and personal finance. So we've seen gamification very well applied to separate verticals, language learning applications. You look at your Apple Watch, fitness apps, there's always this push-pull factor of interaction between consumers to take on basically better habits in terms of their day-to-day lives, their general health, whatever it may so be, in education, fitness. But in terms of personal finances, we felt that even in the neobank sector, there was only really a clause where you would check your bank account to see if there's any money in it, right? Or it's a very monotonous, boring type of experience.
Yeah.
So we thought, go ahead.
No, keep going. Sorry.
Yeah. So we personally believe that this could become a lot more interactive, a lot more engaging, and a lot more social as well. So we've seen a number of emerging businesses, specifically out of the APAC regions and one predominant player in the US market, that had been really running a hole in the market, low customer acquisition costs, high LTVs, all these kind of validation points that you want to see when you're looking at various different businesses, sectors, business models, to understand if this is something we're launching or going into the space with. So what we eventually landed in from our validation was that we observed a mechanism known as price-linked savings, which you may not have heard of if you're based out in the US, but it's one of the most popular savings schemes in traditional banking across many different global markets. So in the UK alone, there's a very popular scheme known as the premium bond scheme. It's dubbed price-linked savings in this market as well. So there's over £200 billion in this program, and roughly about 1/3 of the UK population engage in this type of savings account. It's also very popular in India, Pakistan, Australia, Canada. Many different jurisdictions have it within traditional banking. But to give you just a quick description, you're probably asking, what is it specifically, or how does it operate? I like to present price-linked savings in 3 simple steps. One is that it's a place where you hold value. It's where you hold your money in a savings type mannerism, with the difference, so you can deposit or withdraw whenever you wish. But the difference being is that you win yield or win interest on top of your principal week on week or over the year, as opposed to earning it on a fixed rate of interest, such as 1 or 2 or 3% annualized. So the way in which these accounts work is that all the liquidity amongst participants is basically aggregated together in a single pool, and the institutional amount of interest or yield that's earned on top of all the holdings is then distributed to the user populations back at random. So it's not a fixed interest rate. And how this would work, or the benefit, let's say, of why someone would participate with this, it's still a pretty good place to earn a variable amount of interest you'll earn on top of your principal if you stay with the program.
How much interest do you offer?
Well, it would obviously depend in terms of the way in which, how much liquidity is in the pool, how much users we have, etc. So there's different variables that would participate to how much interest is earned. Of course, what the market will offer as well in terms of how the assets are ran, or I can get into the treasury strategy of how we operate as a business. But like a savings account, it completely varies on the market, right? But the benefit and trade-off is if these liquidity pools get big enough, they can turn over millionaires every couple of weeks, right? So that savings scheme I'd mentioned in the UK, the liquidity pool gets so large that the interest that's made across all participants, if that is siphoned to just a few users every week, the users have the opportunity to earn on the upside of up millions for just engaging with the savings account. So It's a completely different way of holding assets. It's very social driven. It's a very marketable type service as well, where there's different communities of winners on a week basis, and a number of success stories that can come from taking on a good participation of holding and saving assets over time.
And so you're familiar with Robinhood, right?
Of course, yeah.
Like, so how is it that you're trying to make yours? I mean, because compared to other fintech platforms, Robinhood has like the most gamified version of how you can trade stocks or buy assets or anything like that. Like, how are you trying to make yourself distinct from, let's say, Robinhood? Because I feel like yours is kind of like coming similar to that, but instead there's a bit of a crypto-ness added to it.
Yeah. I think if you look at it from a top level, right? So Robinhood is the OG, right? They've been very successful in creating gamification. But what they would also very much welcome, specifically in the US market, I believe they're only in the US or North America, is that they welcome speculation, right? So the gamification is really on options. It's around taking risk-taking behavior. Whereas our platform basically rewards people for savings type behavior, where you would be rewarded if you hold your assets over time. You'll be rewarded with milestones or higher probability to earn if you lock your funds in, per se, or take a secondary deposit or a recurring deposit on building a dollar cost averaging into an asset. So I believe Robinhood also has crypto assets. So we're a completely crypto-led platform, whereby, as I mentioned, the mechanics of those pools are community driven, but they're done from a token basis. So you can hold USDC, DAI, USDT stable coins, but you can also hold Matic, you can hold ETH, you can hold various different tokens, and the interest that's earned is the prize payouts of back to the community, as opposed to taking a speculative bet on an option to be successful or not, or taking a more of a risky short-term behavior that is cumbersome of trading.
Right, and in a way, with your platform, like, how many users do you currently have?
Yep. So at this point in time, so we're semi-pre-launch business. So we, myself and Philip, we raised our starting round in the second half of last year. That has allowed us to build the platform, get product market fit. Obviously, a lot goes in between building the solution, the deposit flows, getting ourselves as a fully fledged platform, but also building our team and amplifying the initial services into the market. So at this point, we have about 18,000 signups ready onto the platform. But what we're doing is basically drip feeding them onto the platform in 500s or thousands, etc., just to get different qualitative and quantitative feedback over the past few months. We do plan to go live fully in the coming weeks and start extending out and amplifying our services into the market into the second half of this year.
Right, yeah, that's good to hear. What is it about your platform that is like exciting people in terms of, okay, I want to save money, or I want to make sure my do you feel like there is like potential financial freedom that is coming in your way if you were to utilize this platform?
Sure. Well, I think we're the only platform in the market. If you hold over $25 in crypto, you can earn up to $1 million as our top prize every week. So we insure our top prizes. That's covered by a third-party prize indemnity insurer. So in the case that you win on your top prize for simply holding crypto, simply by having our app and holding some funds, you have the opportunity to win on the upside of life-changing amounts of money without taking speculative risk. So you don't have to put it into a very short-term premium option. You don't have to leverage up like you do on many other different platforms that offer 10, 20, 30x leverage. Simply by holding assets and the operating model that we incorporate, you can still earn on the upside without having to take a huge amount of risk-taking behavior, but also not having to take any behavior other than just holding the asset over time. So the way in which it works is that we have multiple different crypto assets. So we're starting off with the three stablecoins, USDC, DAI, and USDT. For every $25 you hold in the app, you get a ticket. And what we do is we run a no-loss sweepstakes draw. That's just for the go-to-market product. If you win the top prize out of that, you win $1 million. If you win the second prize, you win $100,000. So you'll still win smaller amounts of prizes as well. If you go all the way up to a couple of cents per week on the lower prizes, right? So you're still earning variable interest on top of your holding, but you also have that huge upside capability just for simply saving your funds.
Right. And do you feel like this platform is really good for a lot of young people in Europe, especially because I feel like, is it true that it's like people in Europe are very conservative with their financial spending compared to, let's say, people here in the US?
I think it would depend on the country, right? So obviously there's Europe is very segregated in terms of culture, right? So it's an old it's a very old landmass, right? With many different types of people. I would say there's probably more of a conservative nature than the United States, right? If you look at the numbers in the US, a lot of people like to look on credit card, debt, etc. Of course, there's more of a culture of risk-taking behavior. But our peer in the United States who operated in the Web 2 space, their target market was typically more on low to medium income households, predominantly males, people that would be utilizing and playing the Powerball, etc. So it's a weird one. If you look at the US, it does take more speculation, but people still take the same behaviors as people do in Europe. Although Europeans probably would take less of a high risk attitude to the way in which they manage their money, but they're still encumbersome of trying to earn wealth on behalf of taking action, right? So I think the actions and the consumer psychologies are the same, but the risk-taking behavior can be maybe deemed to be more higher in the US, but I don't have the specific numbers on that.
Okay, and tell me about, I'm also looking into your company, which is focused on price-linked savings. Like, just tell me more about where it comes from and how it can develop into the crypto world. I know you've explained a bit of it earlier, but I'd just like to know more in depth of the concept of it.
Sure. So pricing savings is nothing new. So I believe it was first created in the 15 to 1600s to pay out war debt. So basically what it does is, in a very simple form, it accumulates funds against multiple participants, and then the earnings on top of that agreement, whatever it may so be, is that only a selected amount of people will earn on top of participating with the program, as opposed to everyone getting an equal cut. There's no downside to it. It's simply a savings type behavior, right? But that the reward on top of the total pool is then concentrated amongst a number of consumers. So it started out with bond debt in the wartime. So I believe it could be traced back to the 1600s, where countries would use it to pay off war and debt, etc. But it can be mostly seen to be revolutionized through the premium bond scheme in the UK, which is actually a government-led incentive that's basically just works like the typical bond. So an IOU, you can deposit or withdraw the bond whenever you wish, but you also have the the opportunity to earn the whole contribution or pool by simply engaging with the program. So it's a gamified way of getting people to take on more of a holding or savings habit. So we've seen it digitized across some markets, and for us specifically, we see it as a blue ocean to bring this business model in the crypto space.
All right, and I'm just now going to wrap up our conversation with a couple of final questions. So, what is your overall vision and goal for Klink in the coming years, and what do you guys do to change? Well, let's just say, what are your overall visions and goals for Klink? I think that'd be a better question.
So our mission at Klink is to create enhance global crypto adoption through price-linked services. So we're personally bullish that there's many markets out here that know about this business model, this way of holding assets. They may be more used to it in the traditional savings scheme. So what we want to do is bring their first steps into holding crypto assets to something that they're probably more used to within the traditional banking world. So there's always a big argument out there that it's a conversation between crypto natives and crypto curious or newcomers in crypto. But we personally believe that taking on the next wave of crypto consumers or first timers is through mirroring these type of traditional schemes. So that's basically where we see it. For us, a bigger win is when we start bringing users into crypto for their first time, and obviously enabling wealth generation for users to take more of a savings type behavior with crypto assets.
Okay, sounds good, Chris. If you have any piece of advice to people in the startup space or entrepreneurial space or even the crypto space, what advice would you give them?
I think hold on for dear life, right? We're a very bad market, but stay true to your vision. The only people that will tell you your product is good, bad, or ugly is your users. Build in this environment and we'll be in our next run sooner than you know it, right? So it's just staying diligent. Believing in your vision is something that's going to get you into the next stage of this market life cycle, let's say.
All right, cool, Chris. Thank you so much for coming on the Next in Time podcast, and looking forward to seeing how Klink will be making that major impact in the crypto space.
Thank you.